All right, welcome back to the Jason Gray Show. Hope you're doing well. Like and subscribe. Thank you very much for viewing my video. Let's talk about the banking crisis and what's going on. So, as you might know, the Federal Reserve obviously cut down 3 banks. The banking industry cut those things down. Credit Suisse today came out, and they said they're going to backstop Credit Suisse. So they pretty much backstopped everyone. That $250,000, cap is pretty much sort of gone, right? There was just so much collateral damage if they didn't, take care of everything. So what they did is they created a special pool of $25 billion where the banks could come in and say, my asset used to be worth $100. It's only worth $40. Please give me my $100. You'll get your $100 out when this thing matures. And we're back to the original thing that we talked about back in 2008, which is mortgage-backed securities, right? And you're all thinking, oh my gosh, that name is back out there again. But this is not due to being bad mortgage-backed securities. This is due to the result of the Federal Reserve taking rates from 0 and increasing it so much, so fast that that asset devalues as the rates go up. And so this asset lost its value. And when someone creates a bank run on it, they have to liquidate this asset, and they're losing all this money. And they're like, we don't have any money left. But if it matures, we would have the money, but we don't right now. So the Federal Reserve set back this $25 billion, which I know seems like a lot of money, but I'm going to tell you that is definitely not enough money. So about 4:30 Eastern Standard Time, so 1:30 Pacific Standard Time, the Federal Reserve is going to release how much money they lent every week. Every Thursday, they're going to come out with this report and say how much of that $25 billion did they lend out. Then what they're going to do is they're going to evaluate what banks they need to take over. Now, they might take 0 banks over, but I think that's very unlikely. I think they're going to take quite a few banks over. And so I'm looking at it and I'm saying, if I was a banker and I have this very low asset and the Federal Reserve is willing to give me 100 cents on the dollar and what I have here, I can reinvest that money. Now, they have to pay 5% interest on this money. That's number one. Number two, that loan is due in a year. So are we just kicking the can down the road, right? Is that enough time for everything to get fixed? And then what happens at the end of the year? Do they just continue kicking the can further and further down the road? And I think they will, of course. But let's look at the $25 billion. There is no way $25 billion is going to be enough. There's trillions of dollars stuck into the system, and how many of those assets are bad? And if we're talking about a lot of banks, how many of them has to go to that facility, take that money out, and then reallocate that money? So we're going to see on Thursday how much money they lent this last week. It's going to be a big number, and then we're going to know how big of a situation that we're in. And then the following week, does it get worse or does it get better? And I think what's going to happen if this week's report looks really bad, like they took 20 of that $1 billion or they took 80 billion, they said, oh my gosh, we didn't have enough, we need $80 billion, the market's going to lose its you-know-what. And it's going to freak out. It's going to go, oh my gosh, these banks are in big trouble. Now listen to this. The Federal Reserve will not tell you which banks borrowed that money. They won't tell you for 2 years. So you won't know for 2 years who borrowed all that money. So by that time, are they financially sound? More than likely, yes. But wow, this could have some big ripple effects on everything. And, people are talking about when does the Fed need to pivot? What's going to happen? What should the ECB do in regards to over in Europe, with the Credit Suisse situation? Should they stop raising rates? And so it's turned into like this major thing. And we talk about the Feds broke the system. They would go as far as they could until it broke. And what they did, unfortunately, and I just don't know how they could not see this going forward. These are not dumb people. They've got hundreds of people to do, run numbers and try to figure out what's going on. You can't tell me they didn't think forward about, oh my gosh, if there is some type of run on something that this is going to happen, and everyone's going to look at everyone's banks and look at their balance sheets and go, how much mortgage-backed securities did you buy and when, and what's the value of those things now? Do you need to liquidate your money because you're not going to be solvent? And so this could turn into a bigger crisis than I think that we're all anticipating. Maybe it doesn't. Maybe everything's totally fine. But at the end of the day, the next couple weeks are going to be critically important to see if this thing chills out or if it gets really, really bad. And if it gets really bad, hold on to your seats. I think everyone's going to roll to the top 4 banks, right? They're going to roll into the Chases and the Wells and the B of A's and everyone else in the world that are out there that are the big ones, the too big to fails. So be cautious, be careful, listen to the news. Please watch my YouTube channel. I'll keep you updated on what I'm seeing. I'm not 100% correct on everything, right? I make mistakes. So just listen to what I have to say, get opinions from everyone else, and then make some decisions off of that. I'm not giving you any financial advice whatsoever. All right. Thank you for watching my video. Like and subscribe. Let me know what you thought of this video, all right? Talk to you soon. Bye-bye.